Yo guys, what is good? I hope you're all doing absolutely amazing and are trading safely in the markets. It's your boy VGOK and I'm finally back with another video for you guys today. Now before we get started, allow me to please apologize for keeping you guys waiting for so long for my next video. I've only been back in the UK for about a week now after I got back from my vacation in the US. Now, I did say to myself, whilst I was out there, I'll try to trade and document my progress, whilst I was abroad. But the timings just didn't work out. Now, I was actually out on the west coast of America, so I think London's session open was at midnight there, sort of at the local time there, and New York session was in the middle of the night, sort of around 4 or 5 p.m. a.m. in the morning. So trading sort of at these times, it proved to be more difficult. So I do apologize for that. But diverting your attention now to today's video, I'm going to be going through a full trade breakdown for a US30 sell scenario. It was executed in pre-New York session, which in the end it achieved a final risk to reward of 1 to 33 risk to reward.
So as always, I'm just going to go into the analysis by starting off by going through the before and after screenshots. So as you can see on your screen right now, you can see where I'd be having my entry point, and that'll be on this blue line right here with the stop loss just above this high over here, and having my first TP just at these equal lows right here. And in total there were 3 take profit points. Obviously the second and third being lower down than this in this screenshot that I've shown you right here, but I will be able to show you guys the subsequent TP points later on. But yeah, this is just sort of highlighting where I had my entry point. We can see there was a previous zone of supply right here, in which we had the mitigation. We then had the drop in the opposite direction. So we had the rejection from the zone, giving us validity for this zone to be valid, which is why I sort of placed my trade as such. And as we can see right here, we've got the sort of during the trade was placed. So just after I placed the trade, we had positive movement away from my entry. We had price moving into profit in that bearish sort of fashion. So it was a very good reaction from zone, pretty much zero drawdown entry, which is just what we like to see and what we expect to see from these sort of trades that we're taking. But that sort of reaction sort of during the trade, and this black line right here, it's just measuring the size of the previous impulse. So I was just sort of getting a rough idea of where I would like to take my first take profit, and as I said, I took them at the equal lows there, which was not too far away from this measured move. So this measured move here, this black line, is measuring the size of this impulse. So from here to here, it's just the same distance from starting from here, as this is the start of the new impulse to the downside. And finally here we can see the after screenshot. So there was that initial point of interest, that supply zone, the proof that it was valid, and then it gave us this zone where we could pretty much just enter off of. Now this is on the 45-minute time frame, so just so I could show you all the take profit points within here. And as you can see, the TP1 was at these equal lows like I mentioned earlier, with the measured move coming down to this demand zone as well, just underneath those equal lows. TP2 was at the next structural point, the one that made sense, which to me was this one. So the second take profit point was there where I secured some more partials, and then the third take profit was down here just before it got to this major demand zone over here. And in the end, that TP3 was that 1 to 33 risk to reward ratio. Now, as you guys can see, beyond the TP3, it did decide to go on and continue to the downside, to the bearish side, and the market did decide to sort of continue to decline. And I'm going to be going over sort of further entries that were available up over here, just so you can see sort of how many opportunities there were to sort of grab this trade. But I'll be showing that to you guys coming up next in the analysis.
So before we actually get into all of the sort of the full breakdown and how I actually got this entry right in here, and obviously I'm going to go through a couple of subsequent entries which were available afterwards but I didn't personally take. Now before we get into that, I just want to have a look at the previous couple of days of price action. Probably up to a week before, so the 5 trading days before. Now, as we can see from here, if I just move it to the 45-minute time frame, what we can see is right here we see this candle pushing down below these equal lows right in here. So we can see that this candle here, it pushes below these lows right in there, and then we get a really big movement in the opposite direction. So we can see the manipulation that exists within there, giving us this bullish point of interest. Now, on the flip side of things, looking at the bearish side of things, we can also see there are bearish sort of points of interest being created as well. So here we can have this last buy to sell movement that took out the liquidity above this trend line. That gave us this point of interest, and as we can see, it had these successful mitigations, these following mitigations occurring the following day. And we can see the good reaction from those zones, and then that's what brings it into this demand zone, quite deep into this demand zone, I'd say. It brings it into it, but this demand zone still holds and brings it back to mitigate this supply zone. So we are currently sort of trading within this range. It's consolidating. It's not ideal, if you're getting in the middle of this range, chances are you're probably getting stopped out or broken even a lot. Trading in a range, it is very possible to do effectively and profitably, but effectively you have to have your entries at the bottom of the range when you're buying, and obviously at the top of the range when you're selling. But as we can see, the price action and the mitigations happening day to day. We had a mitigation over here in Asian session, and it continuously it decides to respect this zone, and it doesn't, it's not violating it, it's not breaking above it, it's not breaking structure above it or anything like that. It's respecting it and rejecting down, as you can see. As we look over on the day before execution, so the 8th of June right here, just change it to the 15-minute time frame once more. We had a very harsh sell-off in this moment here, and it left some imbalance in there as well. So you can see that sort of rally-based drop formation sort of there, or if you wanted to, you could even look at it as a sort of trend line sort of formation happening right there, liquidity above, and then that buy to sell formation happening right there to give us this point of interest. It pings into it very nicely actually, just towards the close of London session, and at London close at around 5 PM it really does decide to show its strength and show which way it really wants to start moving, which is obviously bearish. Now that in turn gives us our point of interest for the following day. For me, that was enough just to take entries straight away. As soon as price hits this zone at the top in here, I was happy to take my entries because we had proof that this was bearish. It was proof that it was valid, and proof that the sells were actually good to go for. We also had the build-up of liquidity over here, the build-up of equal lows here, so we know that price would eventually want to return to take out those equal lows. Seeing that it didn't really do that over here when it was so close, it came back up, it needed to mitigate, it needed to collect more orders over here for it to then drop and then take out those equal lows, which was our TP1. And as you guys can see, the entry, it was pretty much based off of this 15-minute. You could also argue the 5-minute time frame, which I'll show you as well, but on the 15-minute it's these 2 consecutive bullish candles before it drops off. There's a nice imbalance in there as well, which it did decide to fully fill in as well. And looking at the 5-minute time frame, as we can see, so the 5-minute time frame I was a bit more lenient with, extending the zone just below this wick as well, as that in some cases that can be seen as a base drop that took out this final demand. But either way, the zone was still good, the entry area was still good. So that was my entry just in there. It went slightly into drawdown with it wicking up here, but it did in the end close below into our profit region, and it continued to go down for the rest of the day and for the next couple days actually as well. So that was how I got my personal entry. It was about a 60-point stop, so slightly large but slightly larger stop, but for US30 it's quite I'd say it's allowed. I don't mind having a slightly larger stop up to about 60-70 points max, I'd say, for US30 for me personally, for my trading style. But yeah, so just seeing that, seeing a 60 point stop, if you're seeing that and seeing, okay, that's too large of a stop for me to fully go for, I'm going to cut the chart off right in here so we can actually have a look at some parts of you know, the actual entry time and entry area, and then the subsequent entries as well. So just jumped into replay mode, and I'm going to press play over here so we can start to see the I'm going to cut it off just once more. So at this moment, you know, we've hit our entry and we're getting good movement to the downside. Now if I just step it down into the 1 minute time frame, what we can actually start to see in this region now is, you know, another sort of fractal manipulation happening. Now some people will see this and they'll be like, okay, great, we've got equal highs, we've got the big spike to the upside and then the aggressive drop to the downside, showing us that manipulation, so, you know, giving us a reason for further entries. So that was one way to sort of people that will be looking at it. Another way is just that this is another Wyckoff sort of distribution schematic occurring on a smaller time frame within a higher time frame supply. So obviously what we've got here, we've got the preliminary supply right here, we've got the buyer's climax, automatic rally, secondary test, a sign of weakness, and then it goes on to make the UT and the UTAD up here. We then get the harsh drop off, breaking structure below in here, you know, confirming the fact that this was a successful UTAD, a successful manipulation, and we can actually eventually see, you know, there we go, the structure did break successfully to the downside. So you could have had another entry, I would say, probably. There's some imbalances open within here, which I'd be looking to take further entries in. So maybe the imbalance fill in here and having the stop over here. So you are taking the stop loss down by 10 points in here, depending on where your entry would be. And as we can start to see, if I just hide this one for the moment, and we can see, obviously just having the first TP down to here would be that 1 to 5. And now this isn't the one I took, this is just a subsequent one which I'd seen afterwards, but sadly did not get a chance to get in. And there we go, we see price come back up. It actually came back all the way to this wick in here, so it came back to that wick in there quite nicely, pretty much exactly as well, very accurate indeed, and it does decide to continue to the bearish side. So that was the sort of next entry, that was on the same day, and obviously on the next couple days sort of after this there were more entries. I'm not going to go into all of those because we'll be here all day otherwise, but there were the two main entries I wanted to sort of show you and look at. But yeah, looking at that second entry probably would have been a lot better, a lot nicer as well. So we had the 1 to 5 risk reward at TP1, we had a 1 to 11 at TP2, and all the way down to TP3 we would have had a 1 to 40 almost, yeah, a 1 to 40 risk to reward with that second risk for that second entry. So yeah, just exiting out of the replay mode now. I'm just going to show you quickly sort of what's happened sort of after my final TP got hit. You know, it's always a good thing not to set some TP if you're in a winning trade and it's a swing trade like this one was, or maybe not a swing trade, I'd say probably an intraday trade. But I would say, you know, I'm pretty annoyed because at the moment it would be floating around a 1 to 45 roughly, 1 to 46 almost risk to reward, had I have kept that original position open. But to be honest, you know, it was my first week back after being away from the charts for about 2.5 weeks, 2.5 to 3 weeks. So I was happy to have a successful position that, you know, that gave me profit to compound my account further really. So there we have the full breakdown of that 1 to 33 risk to reward trade on US30. Now if you enjoyed that video and felt that you learned something and gained value from it, then please do give it a like, and don't forget to hit that subscribe button if you're new around here. And also to stay up to date with the future video releases, please do turn on the post notifications by hitting the little bell. Thank you guys so much for watching, and I'll catch you guys in the next video for more of that trading source.